Good afternoon and welcome to our weekly livestock market update. I'm Brownfield News anchor reporter Megan Grebner. With us this week is University of Missouri livestock market analyst Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, we talked last week. Cattle on feed report was coming out today. It was released 3 o'clock Eastern time. What are some things that we need to take from there? And are there any big surprises in that report this week?
Yeah, I think number one, when you look at the report, pre-report estimates certainly were very close to what we ended up with in the final report. If you look at cattle placed on feed in October, 2.2 million head of cattle placed on feed in October, about 95% of a year ago, so we're below year-ago levels. That's pretty much where pre-report estimates would have come out in terms of midpoint. On feed as of October 1, sitting right at the same level as a year ago, which was also very close to pre-report estimates. It reminds us that we are down in terms of cattle on feed. I think a number of things are at play, and I would remind us that we haven't necessarily gotten rid of some cattle that will eventually be placed on feed, but I think there is, number one, some pretty strong demand for calves to go on wheat pasture. And that has kept calves maybe out of feed yards a little sooner. And as well, when you look at the bottom line for feed yards, it's been a pretty tough road here of late with returns not looking very good and frankly not much of an opportunity to lock in via futures markets any kind of reasonable return for calves entering the feed yards right now. So I think both those things have given us the incentive to keep some calves out of feed yards here for a period of time, and the report sure shows that today.
Do we worry about what happens later on down the road if we're holding those calves back now?
Yeah, so I have some concerns about that. I don't think they magically disappear. It means we probably place them here a few months down the road at heavier weights than we would have otherwise. We probably then have allowed a little more frame growth than we otherwise would have expected, and by the time we start slaughtering those calves out here next summer, we may see higher cattle weights. So more cattle and higher cattle weights in 2017 kind of gets us down the same road we've been in for much of 2016 with more production coming in front of us. So it does come to roost at some point. It may be delayed. And I will say the nice thing is with a little less cattle on feed right now, I think that's been some of the things that's given us some strength in prices here in the near term that we otherwise might not have seen.
Scott, as we talk about those prices, how do the prices that producers are receiving for cattle correlate or not correlate with what we're seeing on the retail side of things, because they sure aren't declining at the same rate?
Yeah, that's right. So we did get a little retail price information out this week that talks about where we are in terms of beef prices. For the month of October, choice beef retail prices down 13 cents. That's about 46 cents down relative to June of this year. So we are seeing lower retail prices. They have been sticky. When you think about levels of those prices, retail prices are still a little above where we were in 2014. And as we all know, live prices are certainly much lower. I think we're going to continue to see retail prices move lower as we get into 2017, and that can be helpful. But we'll have to wait and see whether we catch up with just how far farm prices have fallen. And I remind producers all the time that there's a lot of value added being done in cattle processing and marketing today that sure suggests a smaller percentage of the consumer dollar makes its way back to the farm. And I say that because those other value-added things we're doing in cattle markets today aren't declining at the same rate cattle prices have been falling and can tend to provide for sticky higher retail prices, if you will.
So let's talk a little bit about what happened overall this week on the market. Any big moves, or is it still, are we seeing a more quiet week ahead of next week's holiday?
Yeah, so I think we've seen a little bit of move. When I look at cattle markets, we're up for the week in terms of cattle futures, which is good news. I think many taking a look at pre-report cattle on feed gave us some strength there. If you look at calf prices for the week, we're up $6 or so relative to a week ago. I think fairly strong demand for calves to go on wheat pasture as part of what we saw going on. But we are seeing, again, I'd say a little bit of building on strength in cattle prices, which is good to see after what was a long period of down for us. Hog prices, despite large runs of hogs, we've seen hog prices that have been fairly flat for the week, as well as futures being flat for the week. So all in all, I'll say not bad when you look at the current market situation, and feed costs have stayed reasonable.
We talk about another big run of pork slaughter this week, another record week, a big week for chicken. What does that mean as we wind down the fourth quarter of 2016 and head into setting up to 2017?
Yes, well, so I talk about it all the time. We need really strong demand, given that we continue to push additional meat supplies. It reminds me, it wasn't just but 2 or 3 years ago, Megan, that we would have talked about per capita consumption of beef, pork, chicken, and turkey in this country coming in at about 200 pounds per person. That was off of a peak back in 2007 of about 220 pounds per person. But when you look at what's happened in the last 2 or 3 years, we're already back around 212, 213 in terms of per capita consumption. So it's been the surprising part of this turnaround in how fast it's occurred and how quickly we're getting back to the old levels of per capita consumption. But we just need strong demand to continue to deal with the ample supplies of all three meats that are really coming to market today.
Scott, and that demand's not just here in the United States. We need to grow it globally as well. How much more challenging is that once, as we look at the strengthening U.S. dollar, and how does that play into effect?
Yeah, absolutely. When you look, we've certainly seen the dollar strengthening, especially I think since elections, and I think that's going to be tough on us in terms of getting more product out of the United States when we talk about beef and pork. And again, we continue to have discussions about trade agreements and whether we like new trade agreements or we don't like new trade agreements. All I remind us is all the time that our growing population is outside the United States. Where we're going to actually grow U.S. meat consumption will occur in countries beyond the United States. They're the ones that are going to have income growth that is growing at the fastest rates, the ones that will spend a larger proportion of their additional dollar they might have in their pocket on meat protein. So all those things tell us we've got to be shipping more product outside the United States, yet a stronger dollar is a hindrance to that, and the strength we've seen here in the last 10 to 14 days is, I think, a little problematic as we look at trade for the remainder of 2016.
You're the chairman of the House Ways and Means Committee. Representative Kevin Brady out of Texas come out earlier this week and talk about not necessarily withdrawing completely from the Trans-Pacific Partnership, but maybe renegotiating it and also opening to maybe modernizing. How important is that for those trade agreements specifically for our protein demands and to get those out into to those markets?
Yeah, so TPP is certainly very critical from both a cattle and hog perspective in particular. When you look at TPP, those are the two that I think are the biggest winners, if you will, from TPP. And I will say gate price changes for pork into Japan is very important to the pork industry, but reductions in tariffs for beef going into Japan is also very important. If you look at some of our competitors today, Australia with a tariff on many products of around 28% or so, we're sitting here today a little shy of 40%. That's not necessarily fair competition, yet when you look at what TPP would have done for us, I think it really creates tariffs that are very similar for our product and Australia product as you look longer term at TPP. So if we back away from those, the TPP agreement in particular, I certainly think it does mean less trade, all else equal. And I'll say that in net, even though we'll provide some additional access into the U.S. market for beef, in net, I think we'll see less opportunities without a TPP. And yes, we're talking about NAFTA as well. And I will always say, yes, we had more calves come from Mexico into the United States to be fed as a result of NAFTA. But when you look at at Mexico today, they're one of our top 3 beef destinations at this point. So the additional income growth that we've seen in a country like Mexico, that I think occurred primarily as a result of NAFTA, has been important. And we don't want to forget as we think about our position on trade agreements. I just keep reminding us that we need to export more products in front of us, not less, and providing good opportunities for us where we can compete more fairly in these world markets is going to be more and more critical as we look ahead.
Scott, I want to run back or go back to those pork numbers real quick as we talk about this fourth quarter crunch and we see week after week of record hog slaughter. Is the pork industry doing anything to contract or maybe reduce the amount of hogs coming to market? And how does that set us up for the start of next year and even into next year?
Yeah, number one, I'll remind us, just because we turn the calendar to January 1 of 2017, we should not expect that's the end of some of the problems that we face in the hog industry. Yes, it's tough in the fourth quarter because of what we do seasonally in terms of slaughter, but it's not over. If we look at South slaughter data that we have available to us, yes, we're up about 3.5% relative to a year ago, but that doesn't really suggest us we're getting a lot of breeding herd contraction coming. And if you look out there, I think we've seen a lot of investment in facilities that we can do nothing but produce hogs in those facilities at this point. So we're not really going to leave those buildings empty anytime soon. So we're going to continue, I think, to have big runs of hogs in 2017. I think we also quickly say, hey, we got more processing capacity, so the problem's over. And I'll say it's nice to have more processing capacity, but we got to move more pork at the end of the day. And that may be our problem, in that lower pork prices in 2017 give us lower hog prices in 2017, and it makes 2017 not a very exciting year, I think, for pork producers, and could be very troubling. I mean, we sit here with corn now, current futures setting around 340 or so. What happens if we get out there next June or July and talk about dry weather and we push corn prices back to, let's say, 425 or 450? That could be very troubling for hog producers. And so just the opportunity to show profitability as we look in 2017 is pretty tough at this point.
Scott, as we wrap up today, heading into a holiday week next week, short trading, anything to think about? Are we going to maybe see, will that impact trade at all next week?
So I do think we'll see a quieter week, and of course we won't be slaughtering on Thanksgiving Day, so we'll see slower runs for the week next week. I always encourage folks to think very carefully about what they want to market in a holiday week like next week, but I do expect that things will be fairly quiet as we do have a shortened week.
And we'll talk to you a couple of days early next week as we all celebrate the Thanksgiving holiday. Scott, good to see you.
Good to see you as well, Megan.
If you have questions for Scott or myself, visit our website, brownfieldagnews.com, and visit our weekly livestock market update page and submit your questions there. You can also subscribe to have us delivered to your email box every Saturday morning. Once again, brownfieldagnews.com. I'm Megan Grebner on Brownfield.